right, we are back, and we've got market maker extraordinaire Jake from Wintermute. Good to have you, man.
Don't fancy trying the second name then.
So first time we met was in the London studio. Personally, I prefer this space.
Yeah. The weather's a little bit different. It was in October as well, so
yeah, I mean,
October in London, or
we've even got our Deribit coconuts.
It's very bull market vibes. Very bull market vibes.
Yeah, they are great. They are great.
So, Jake, let's get straight into it. What are you thinking at the moment? How are you seeing markets? What do you like?
It's been an interesting period, right?
It's been an interesting period, and I mean, I think it's hard to sort of like talk about where we are now without going back to this, I guess, catastrophe of turned out to be a bit of a catastrophe for markets anyway on the sort of Liberation Day, and I mean, it just didn't really feel like anyone was positioned to properly edged into it.
Yeah.
It sort of felt a little bit like you've got Besson now leaving the party, and that sort of has come out. But it was like this flood the zone kind of approach, which markets, I think, are very clear.
Chaotic as hell,
right? Very well. I think, very, very chaotic. But I think if you go back and always like step back and say, like, listen to the game master here, we've been told in the build-up to the presidency, but from the start of the presidency, like even up till now, that it's going to be short-term pain. The markets weren't listening to Trump and the administration.
Yeah.
So I think what they've really done, and I'm not saying it's the right way to do it, but I think like almost objectively at this point, I listen to exactly what they're saying. What they've done is they've anchored the expectations so low for the market that really there was only one way it could go, and that's to lift. And I think like if you look at the pricing, I mean, it's hard to talk about crypto in isolation during this because a lot of this was led by the SPUs and the NASDAQ, right?
Yep.
And so I think it became really like necessary to be looking at the volt pricing in those markets. And you had like the Friday before we started to bounce and everyone thought about Black Monday, and you're looking at the put pricing that Friday and you're like, if there isn't a Black Monday here, everyone's offside. Like there's no way these puts are, you can't make money on the puts. So it then became a sort of like reflexivity move to the upside, and like you then get, obviously you run into like long only funds who are there, they're not looking at like even quarterly or half yearly allocation cycles, they're looking at multi-year.
Yeah.
If you're a long only PM and you see that coming in, and a lot of pods do up, right? I think everyone sort of knows that there's a lot of pain in those multi-sprats, and all of this bled into what happened. And so I think now we're just...
It's funny, like you say that, I almost feel like the least pain actually was in crypto.
Right,
There's so much pain in rates and equities and things like that, but in crypto it's like digested it amazingly well.
It did, but I think like again, like framing it back to what had gone on from like into the inauguration, that was pretty much the high of this local high, well, the local high really. And then the crypto, I think, had the first move lower.
Yeah.
A lot of this stuff was coming out over the weekend. So I think it was basically acting like, almost like proving that like these perpetual NASDAQ futures that people are now talking about are a good idea, because you obviously had the huge gap risk in equities, like closing on Friday, opening on a Monday. And actually people were then leaning into crypto on a Sunday night when the first tariff headlines started to look really bad. And that was the first fall for anyone de-risking or trying to hedge.
Yeah.
And I think that naturally led to weakness, obviously, in crypto that came down first. Then at some point, again, like, there's no sellers left. And I think that's really what we got. And then a lot of this move, I think, really is from, like, the dollar coming off as well. So, this debasement.
On the dollar point, I think the big question for me now is the unwind of some of this legged in Mag 7, is this persistent, or is this now done and the weaker hands in that space are out?
Yeah.
And, because people are saying this could last years now as people rotate out of Mag 7, out of dollar assets into bringing money back home or whatever.
Yeah.
Do you buy into that story or not really?
I mean, I think if I had a pound for every time someone said, "Oh, this time it's different," I wouldn't be here. I'd be a Costa Rica, Lola juice bar or something.
I mean, you're in the fire, Jake. Come on, it's not.
So we're not in the worst place.
We're in the club.
No, but I think a lot of that, like everyone's talking about this end of US exceptions, but at the end of the day, these markets are very heavily driven by passive flows. And yes, you have the European like pension funds, but I mean, again, like you think about this, like those guys need to get sign off to start reallocating, change portfolio exposures, dynamics, and that takes time. Like Trump is only in the White House for so many years.
I don't, Jake. That's the point that I've been making to a lot of people. Like, and I've worked with some of these big pension funds in my career, and they're very slow to reallocate, and they take a long-term view. And I guess to like your point, like I don't see enough change, and like you still got to think that tech is the play for everyone going forward. The best tech companies are still probably going to be in the US. The whole dollar story, it's like there is no credible alternative. Within the fiat world, we obviously would probably go Bitcoin and what have you, but in the fiat world, there's no alternative. There's this little subplot going on with stable coins that now, like the dollar through stable coins, is becoming more entrenched in the sort of, well, certainly in the digital ecosystem. So it's kind of, I mean, I saw things were playing out as it was a global de-risking. The US run a negative net foreign investment position, more foreigners own US assets and US own foreign. So everyone was just selling just to gross down risk. Yeah. And that's why dollar went down, equities went down, treasuries went down, which is unusual. Now we'll see, I guess. But my Nasdaq's having a good move.
Have you noticed, like, so far in earnings season, every Mag 7 stock has rallied on earnings?
Yeah,
pretty much. Microsoft was up last night. So was Meta. Google was up. Tesla was up. They're all up. Netflix was up. I mean, it's just clearly showing us that these things got very oversold, right? They're having their bouts, and money chases returns, right? Money's not like going to hold a grudge. If these things start making money and they start performing, capital is going to come back.
Where else?
Right? So I don't think it's like people say, oh, the US has lost credibility and they don't trust Trump. Do you know what? Even if they don't trust Trump, if Mag 7s are ripping up 10% every quarter, they're going to investing it anyway.
Well, yeah, they have to, I think, because then obviously, again, you get the CTA positioning that comes back in. And actually, we're starting to see that as a bigger dynamic now in Bitcoin, which, again, is just part of this like big institutionalization of the space where you now do have, simple CTA flows coming into the market. And, yeah, I think it's like at some point, if an asset goes up, people are going to buy it. They're not going to, a lot of the time, buy low, they're going to buy high. So you get the sort of, I guess we call it the mean aversion relative value traders stepping in, and you get a big move lower, and then you also get the CTAs now buying higher. So Bitcoin as an asset, I think, is way more in line with your equities than he used to be. And I know that people, again, had been talking over the last maybe 2 weeks about, oh, maybe this is the big.
Yeah, I mean, we've been having those conversations.
We've seen this before. We saw it when Silicon Valley Bank went down, and actually then Bitcoin was the best off the gate for that.
Yeah.
And again, it was this like, okay, they're safe to trade. But at the end of the day, if you're a big asset manager, you need the US, because it's the biggest market. You're always weighted on market cap, and that's where the big market caps are. So even without earnings growth, you do get passive investing.
Yes.
I guess then you're getting into, like, we're talking about real big, longer-term macro themes, like, I don't know, the population aging, population growth. Like, this always has, like, implications to the market.
Oh, Jake, we've talked a lot of macro, and we don't have you for much longer. So tell us, back to crypto options, what's your favorite trade right now?
I do think at the moment, like, the Bitcoin vols are extremely suppressed. I mean, when you look at the belly of that curve and you're trading like mid 40s at the moment, ETH's still carrying in the mid 60s. And there is some really structural changes that I think have been going on since like your iBits launched, and we had this like constant sort of overriding flow. So I think that's really interesting. I think we spoke about it last time, last time we spoke was before that options roll out, and we were saying how maybe like there's going to be some relative value plays in the Bitcoin versus Ethereum. And I think that's still quite an interesting.
Well, you'd be a buyer of Bitcoin to sell Ethereum vol right now.
I think I don't know if I'd sell Ethereum vol, but I think you can probably do one leg of that trade. On a cross-asset basis, like, it's hard to lean on the percentile readings at the moment on a cross-asset basis because we have had that big change in Bitcoin.
Yeah.
So if you'd looked at like this big correlation between sort of where Bitcoin vols versus SPY, they're at a completely other end of the spectrum. And at some point, there has to be some pop there. So I do think optionality remains quite cheap. And so then stock replacement becomes a little bit more interesting, especially when I personally think the next move probably comes from the economy, the strength of the real economy now rather than tariffs. And that could be good, it could be bad, but I think it's a good time to get like left and right tails on.
There you go. You heard it here from the man himself. Own some crypto vol. All right, mate. It's been a pleasure catching up with you again, man. You're always welcome back in the studio in London whenever you want.
Prefer it back out here.
Yeah, I think I would too. All right.
Cheers, Jake.
Nice guys.
Take care.